You are not going to get a separate code. In fact, I'll tell you what, even if people come to my office with construction clothing on, I will not allow them to do percentage completion unless they qualify for it under IFRS 15. So people have been making compelling arguments, showing me their website and their license, and saying, we are a construction company, allow me to do percentage completion. And the answer is no, only if you qualify for those things. Anyway, so IFRS 15 defines sales to customers and only applies to sales to customers. Non-customer sales will still have their own standards. The sectors that are impacted, let me tell you, telcos. I gave you the example of a telco. Telcos will have to relook at their bundles. Real estate and construction, I gave you the example already. Developers love this. It gets them back into percentage completion. They will now, as they are laying bricks in the ground, be able to recognize revenue on their developments. Software companies. Software companies, it's very interesting for them. And let me give you an example of a software company. So let's say we have an arrangement for $100,000. I'm Microsoft Excel. I sell you Excel on a 3-year license for $100,000. I'm Microsoft. Should I recognize the revenue immediately or should I spread it over 3 years? Before you answer, wait. I'll tell you, auditors will always say spread over 3 years. I'll give you another situation. If I am Norton or McAfee antivirus and I charge you $100,000 and I tell you I will provide you antivirus protection for 3 years, should I recognize my $100,000 over 3 years or at once? Let me explain this to you. If you're looking at the concept of the performance obligation, when Microsoft Excel sells you Microsoft Excel, that's it. They sold you the product. They're not in a relationship with you anymore. Your useful life of the product is 3 years. With Microsoft Excel, if a new Excel Windows 20 comes out, you'll have to buy it. So therefore, they are selling you a product. They should be recognizing revenue when they've sold you the product. However, Norton Antivirus, the moment they sell you the antivirus software, 5 minutes later, there's a new worm or a new virus. They have to look after you for 3 years. Their performance obligation to you gets only discharged after 3 years. Therefore, in their case, they have to spread. You understand the difference? In fact, under IFRS 15, for software developers, it's more difficult to spread. The default position is recognized up front. You need to justify why you need to spread, in that you have a constant right of use or right of access, or you need to be supporting the clients all the time. So, lots of industries are impacted. Software, licenses, pharma, aerospace and defense. Aerospace and defense, what's the question? Do I have separate performance obligations or not? I'm selling you a submarine with a nuclear missile. Can the nuclear missile be used without that submarine? Is it a separate performance obligation? You understand these questions? That's very interesting. Asset managers. The issue of step 3, determining the transaction price, is relevant to them. Contract manufacturers. Can I apply percentage completion or not? Scope of IFRS 15, it applies to anything which has revenue, but IFRS 15 is a residual standard. When I say it's a residual standard, you apply the other standards first. Only that part that is not accounted for, you account for under IFRS 15. You can apply IFRS 15 to a contract or a portfolio of contracts. So if you've given 100,000 iPhones away, you don't have to go to each contract. You can say, this is my iPhone contracts together. You also apply IFRS 15 to derecognition of non-financial assets, so sale of your head office. You don't apply IFRS 15 to insurance contracts, leases, non-monetary exchanges, and anything that's in another standard. All right, so that's the 5-step model. Let's have a break. How long's the break now for, Adnan? Can we have a 15-minute break for prayer and tea? There's a prayer and tea break now for 15 minutes. After that break, we'll continue.